Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and the focus on this show is going to be on the yellow metal gold because the gold prices have continued in their recent upward trend. In fact, they're now trading at the 5-month high levels as well. On MCX, if you see, gold futures in fact rose by 0.3% to 5-month high of over 54,000 per 10-gram basis. Now, this was buoyed by the global rates that have also crossed the $1,800 an ounce as well. And India, if you see, we've actually seen a positive momentum in the last 1 month. Gold prices are up by over 3,000 rupees as well in the past month. Now, what does this mean for gold investors and silver investors as well? Let's find that out with our expert who's joining in right now. Mr. Navneet Damani joins in from Motilal Oswal Financial Services. He is the Vice President of Commodities and as an expert on both commodities and currency. Welcome, Navneet, and thank you so much for taking the time out. Well, first up, help me understand with your take on the kind of move that we've seen in gold prices. 5-month high levels, 3,000 rupees of a move or 6% move, as you pointed out earlier, in this last 1 month as well. What have been the key triggers and what do you see gold prices trading at going forward?
Well, hello Shakshi, and thank you for having us on the show. We've seen in the past that gold prices have been consolidating for much of 2022, and that has been on the back of a stronger dollar and probably some bit of concerns fading it from the war situation in between Russia and Ukraine. Also, to top it up, we've seen that interest rates have been on a rise, and we've seen successive interest rates not only from US but other parts of the world. Now, what has happened over the last 1 month is that dollar index has started to correct. It has corrected, say, about 800 basis point from peak of 112.13 to about 104 currently. Also, we've seen the pace of interest rate hike further is going to be slower than what market was anticipating. That the recent statement from a lot of central bank governors indicate that. Also, inflation has started to cool off, not only in the US but also in a lot of other parts of the world, primarily because of lower crude oil prices, lower gas prices, and lower food prices. So that is bringing a lot of comfort, and that is what has been supportive for gold prices for, say, probably for the last couple of months. A lot of participants were sitting on the sidelines waiting for markets to stabilize, and we see some stability come in, and that is where they have jumped in and built up or beefed up their position, which is also adding to the current momentum. So we believe that targets for this year are pretty much done, and we are seeing levels of 54,000 or 1900, sorry, $1,820 already on screen, which could have been seen on the by the end of 2022.
Okay, understood that. Now, help me understand if 2023 could actually see higher levels than this for both gold and silver. What is your outlook right there?
Well, for gold and silver, we are pretty bullish for, say, probably 12-month perspective. However, for gold, we see that probably for the next 1 quarter, no major triggers are in the market, and whatever drivers were there are already in place and already factored into the prices. So, for the 1 quarter perspective, it could be a sideways to a negative trend, maybe 1,500 point downside. But from a 6 months to 1 year perspective, we anticipate that gold could be hitting lifetime highs of upward of about 55,500 and 57,000 levels. Similarly, for silver, our first level, which we discussed previously earlier, so of 67,000 is almost met. We continue to maintain a very positive stance on silver and anticipate that 72,000 and 74,000 followed by 2,000 by end of 2023 could be on cards. That's a clear 20-22% upside from current level also. Silver is likely to be more beneficial vis-a-vis gold because we anticipate that once COVID concerns in China start to fade off, things come back to normalcy, then industrial metals as well as silver are likely to be beneficial, and a lot of pent-up demand is likely to come in. So our money is on silver at the moment for probably a 12 months.
Okay. How big a factor is going to be the demand that we've been witnessing due to the festive season that went by and the ongoing wedding season that will continue till the end of this year and then restart in the first quarter of next year as well? So, how big is that going to be a trigger for gold prices? Also, we're seeing that China, which is also a big consumer of gold, is now scaling back the lockdown restrictions as well. Is that also going to add some more, positive uptrend to the prices internationally as well?
Oh, definitely. Silver, gold and silver both have seen massive amount of demand on the domestic front. We've seen that probably the year-end estimate could be about 1,000 tons of gold imports and about 10,000 tons of silver import for 2022, which is a massive number. And I believe that similar numbers will be likely be coming in from China as well, because China has been a slow mover at this point in time. But once things start to stabilize, once things start to get normal, shops are open, and when physical investment could be done again, then we're likely to see a lot of pent up demand in silver and as well as gold for the both these metals from Chinese front also. At the moment, demand is not very robust on Chinese front, but say probably 1 quarter perspective, once things are better and the like in which we were in 2020, that's a similar situation which China is in today. So once things are better, I think demand is likely to be very, very robust.
Okay, as a trading strategy, then Navneet, what would you recommend investors of both gold and silver at this point?
For both the participants, we advise that both from a 12-month perspective, we are bullish. We expect that gold prices could correct about 12 to 1200 points, 1000 to 1200 points from here, and could come around, let's say, 53,000 levels, where one could look to go on the long side with a stop loss of 52,000, targets of 55,500 and 57,000 levels. For silver, we expect a 2,000 to 2,500 points correction. So somewhere close to 63,000, one should look to accumulate silver, which stops below 60,000, targeting 72,000, 74,000 on the upside.
Okay, and if I have to ask you between the two, if you have to advise, what would you really advise investors to pick at this point in time? For somebody who is a long-term investor, between gold and silver, what would be your pick?
Well, along with long-term investment horizon, if one has the ability to probably digest a few rounds of volatility, then silver should be your bet.
Okay.
We believe that gold could give you about 5-6% kind of returns in next 12 months, but silver could give you about 20% kind of returns. So our money is
Okay.
on silver.
Okay, understood that. Well, thank you so much, Navneet, for being with us on this show and sharing with us insights on both the commodities, the bullion metals, gold and silver, and helping all our viewers really understand as a safe strategy to adopt at this point in time, and where could one really go for a higher return possibility as well. Thank you so much. Been a pleasure speaking with you, as is always. Let's now wind up this show, but clear cut gold prices on the rise. There could be some near-term profit booking that you could see towards the end of the year, but then next year again, there is hope. Experts are bullish that you could see lifetime highs for gold prices going forward from here. But in case you are a long-term investor and have that risk-taking capability, then between the two metals, the white and the yellow metal, Navneet Damani was really clearly bullish on silver, saying that that could really give a potential of 20-25% of a return over the next 12 months perspective. But for that, you should be able to take some bit of volatility, and some risk-taking capability should be yours as well. With that, we wrap up this edition, but do stay tuned on to Business Today TV for a whole lot more information and engagement on the news from the world of business, stock markets and commodities. Many thanks for tuning in. Don't forget to subscribe to this channel and also stay engaged with us on the other social media platforms as well. Facebook, Twitter, LinkedIn, Instagram, all of the places where we are present, and you could continuously engage with us. Thank you very much for tuning in for now.
If you like the video, do like, comment, share and subscribe.